Hi, this is Jeffrey Kurt, Kurt Financial Group, and today is Monday, June 17, 2024. As we normally do on Mondays, highlight a few things going on this week and then review the markets real quick. So, this week, tomorrow on Tuesday, we get the May's retail sales numbers. So, it'll be a sign of consumption and what the strength or weakness may be, and also what the trends are. So that's tomorrow. Friday is manufacturing PMI. That is purchasing managers index. So again, a sign of strength and demand at the manufacturing level. Also on Friday, May's existing home sales. So a gauge of the what's going on in the housing market. There are also this week 10 Fed speakers, and I've said it before. I don't know why we need or why the importance of all these things the Fed speeches are, but everybody watches them, and they'll be looking for signals that the what the Fed is looking at, and also for future interest rate decisions. Lastly, Wednesday's a holiday, so the markets are closed on Wednesday. I think what I'll do is, today's video, I'll do one on Thursday, and that may be it for the week. Although if there's something urgent, we'll come back on Friday as well. So a couple of things, just looking at the markets. Again, there's a concentration going on, much like what happened in 2023. Going into this week, the Nasdaq's up 18.5%. The S&P 500 again around 14.5%. So those are leaders. The Dow's only up 2.5%, and the Russell's actually starting the week in negative territory, about 1%. So again, this if you're not in the right stocks, it's your account's not doing that as well as those who are within the Nvidias and the big cap technology stocks. Here's a chart. I'm going to show you a chart of that only 30% of the S&P 500 components, 30 of the 500, are beating the S&P 500. So the median, historical median, is around 49%, which makes sense, right? Half the stocks do better, half do worse, and that's kind of what the index is. But right now, that's not the case. And again, this is the second year in a row that we've had this really, concentration within the S&P 500. So in 2023, it was only 29% of the stocks beat the index. Right now, we're at 30, and for back-to-back years, the only time in history that this has happened is in the dot-com bubble. And again, here's a chart that shows those. And I think there are some similarities here. Not expecting the bubble to pop right away. I think that there's some momentum and some earnings, and again, the economy's not doing well. Although there are some blemishes that we're seeing out there, but I think it points to a risk similar. That the outcome is similar to what the dot-com bubble when it burst and like that. So I'll keep reporting on this. Thank you for listening. Have a good week. We'll be back on Thursday. Thank you again. Goodbye.